The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen up in the Northern Hemisphere. Very early good morning to Frank DB in Belgium, who's up at probably 2 or 3 o'clock in the morning to catch this webinar. Good afternoon to our friends in New Zealand and some of you in Australia. Here it's late morning at the beautiful Gold Coast, but I know that the southern states are a bit more enlightened. They actually have daylight saving, so they're an hour ahead of us. Nice to see you all here, and particularly special welcome to Frank DB. Frank, I'm going to be talking about you a lot during this webinar, so it's great to have you. Now, is everyone all right with the sound? If somebody could, Sage, I know Sage is at the webinar, the lovely sister Sage in New Zealand, and she's doing it in her bikini, she tells me, which, you know, is quite a thought to start a Friday here. Okay, Sav, Daryl, all my mates here. Yeah, great. Thank you, Norbert. And Tony, DD, Steve, yes, and Boyd, yes, from Canada. Good. Oh, it's great that everyone's here. Everyone can hear. That's really good stuff. Okay, so lots of interesting people here. Let me briefly say hello to a few. Adrian down in Adelaide. Adrian Stern is... not sure. We had a big surprise some time ago. He was either going to have a unexpected baby or an unexpected, was it another baby, Adrian? I forget, but you'll have all that in your lap at the moment. So well done. Congratulations. You know what they say. People say, you know, life is over at 20. Some people say your life's over at 40. Optimists say your life's over at 50. I can tell you when your life's really over, when you have children. I have a couple of children. I'm really not much into that daddy mode. They're wonderful young people doing very well, but not my bag. Alan Keane, nice to have you with us. Alan's going to come to, I think Alan's going to come to the LA tutorial. Those of you who are interested, folks, our next tutorial is in El Segundo, Los Angeles, towards the end of May, if you are interested. Oh, Adrian, the baby hasn't come. Baby's due in 2 weeks. Good on you, mate. Good on you. Steve Carpenter can't hear anything. Just let me send Steve a note, if you would bear with me. Sound is okay for everyone else. Anyway, good. Let's move on. Alan Varian, my mate up in Brisbane. Yeah, Johnny Barnes. Yes, hello, mate. Boyd up in Canada. I've said hi to Boyd. Chase, my smoking critic, wants me to give up smoking. I've given up everything else, Chase. I think smoking's got to be next. Craig Eyes was a tutorial guy in Waiheke. It was a great pleasure to meet Craig. We had a lot of fun. Daniel Dart's going to come to Los Angeles, I think, for the next tutorial. Daniel Kaur, a couple of tutorials he's done. A pretty smart trader. Oh, yeah, David Volker. Yes, David, nice to see you here with us. My friend David Webb, the king of the black lines. David Webb is one of our very longest-serving members, our oldest members. He's been with us for a long time, done a tutorial too. Frank de Bayer, of course, who does the Fourth Seal commentary for me. Greg Mapes, yes. Harold Foos. Hello, Harold, over there in Reading. Hugh Sinclair, Janet, I better not go on saying hello to her. It's so lovely to have you with us. Jerry Winter, our main broker, Jerry Winter's with us today. Jerry, good to have you with us. Glad you could make the time. John Barnes, Justin Woolley, his dad will be not far away, I guess. Good, terrific. Marcel, my friend up in Canada. Hope you're feeling really strong, Marcel. Marilyn's with us. Mike Mitsos, our gun trader, Mike Mitsos, crikey. Midsley 7 came to the Los Angeles webinar tutorial last year, and he's a very talented trader. He just needed to come to a tutorial to get a few bits to fall into place, and he's been just trading absolutely huge. He's a pretty smart chap. Matty Corbett, my mate down in Melbourne, the lovely Marilyn. Let's see. Oh gosh, we've got to move on here. Anyway, if I haven't said already, Pete Andrews, first bloke I ever taught the Daniel Code to, still with us. Good to see you, Pete. Daryl and Sage, of course. Daryl's the second person I ever taught the Daniel Code to. Sav down in Adelaide. Hi, Sav. And good to have you all with us, folks. Let's move on. You can see that from our front page today. Terry got us a pretty fearsome bear. I said, he said, what do you want in the banner? I said, well, see if you can find a picture of an angry bear. Well, I mean, God, have a look at this one. Looks like he's about to swallow us, and that might well be what happened. So let's move on. I'm going to talk a lot today about Frank DB. Frank's a young man in Belgium. He's a farmer, and he'd never seen a chart in his life until he came to a Daniel Code tutorial in Taupo, New Zealand, in December 2011. And he brought his new bride with him, Anne, lovely lady. We had a great pleasure getting to meet Frank and Anne, and Frank picked up on the fourth and fifth seal, which I was teaching, I think, pretty much for the first time back in 2011. And he made it his mission in life to work and work and work at that. And he helps me now with our fourth seal commentary, which is available on the website. And those of you who are not using that, having the benefit of that, you're missing out on a lot, and nothing more than in gold. It's kind of interesting. We've got a couple of members here who are real serious gold bugs. Boyd's one of them. Harold's another one, and no one said anything actually about what we've been saying in the fourth seal. But here is a chart of Huey. That's Frank is, I call him the Belgian leprechaun, because he's rolling in gold. And Frank not only walks the walk and talks the talk, he's put money up. And in his analysis, he said way back in November, I put this circle on the wrong date here, so it was a bit later than that. It actually should be over to the right, around about that November the 15th. And I got confused myself with Frank's use of dates. He puts 9/11, and that's actually the European Convention on dates. That's actually the 9th of November. And of course, I very quickly looking it up to date, read it as the 11th of September. So do excuse me with this, but move it up. This is where we want to be, around this area. And Frank forecast based on the fourth seal and what I taught him and the work he'd done himself. On 11th of November last year, Frank forecast that was the low in the Huey. And the Huey, for those of you who don't know, is an index of unhedged gold miners. They're gold miners who don't hedge their forward production in dollar value. And this is the price of their shares in an index. And it's a proxy for gold, and also to a slightly less degree silver. And Frank, in his fourth seal, called that and said this is going to be an important low in Huey. And a couple of weeks later, he said, that's the low in Huey. And that's where I've got that a bit later than that, November, 11th of November. Just let me get a indicator so you can see what I'm talking about here. This is it here. This is November in here. And Frank said in his fourth seal commentary, that is the low for Huey. And he also said it could have a false break before it turns, which it did here. And he said that gold is going to be drawn by this, but it's not immediately correlated. You're going to have to wait for it. And I'm actually going to show you the actual emails that Frank sent me in chronological order to show you just how incredible this was. The point being, why he's a leprechaun, he was absolutely convinced that his analysis was right, as the Daniel Code 4 seal is, if it's done properly, that he went out and he bought a great deal of gold. Now, I forget some of the details. I'm not sure. I don't think it was physical gold. I think it was more warrants and options and what have you. But I know it was a big deal. It was a lot of money, and it was done very seriously. He had a fair bit of had to drive down to the head office of his bank in Belgium to do it, and down to he was telling me the story. I've just forgotten the detail, but Frank invested a lot of money buying gold right at the bottom of the Huey cycle. And this chart, as we all know, the last few weeks, gold has that made that low. Long basing program, we'll look at the 24-day chart to show you that, but it's now taken off, and Frank's done extremely well. So this is a guy who not only does the analysis, talks the talk and walks the walk, but he puts his own money up, backs himself. So good on you, Frank. You get everything you deserve, mate. You've done a great job, and we're going to talk a lot more about what you've done there as we go on. Here's our next chart. Should have changed by now, and I've called this the truth about the US Fed. This is a long-term trend chart. This is a 24-day chart of US T-bonds. Those of you who've been with us for a while have seen this before. I roll this chart out periodically, and as you can see, it's amazingly precise. It's been running up its Daniel Code trading channel pretty much perfectly since 2000, and it's been putting in its turns at the Daniel Code time cycles. But this is the point I wanted to make to you right here. Somewhere in here, the last few weeks is the Fed saying, just in here, Fed saying we're going to start to raise interest rates, and we're going to raise them in small amounts, maybe 3 or 4 this year. And look what the market did. This is actually the price of T-bonds. So the interest rate is the inverse of this chart. So if price of the T-bonds, this is the same with all government bonds, price goes up, it means the interest rate goes down. So here's the Fed with first time in 8 years raising interest rates in the expectation interest rates going up means price of T-bonds would go down. In fact, exactly the opposite has happened. T-bonds has taken off, roaring up into its next time cycle, which is a 59 or thereabouts, and have a look where it is right at the very top. In fact, breached the top of the Daniel Code trading channel, and this is the highest it's been ever in terms of the price of T-bonds. And of course, that means the lowest interest rate. So the market's pretty well stopped listening to the Fed, at least on this issue. But this is one of the sorts of things that happens when there's a bear market and when people are frightened. They run to safety, and T-bonds, any government instrument, has a high degree of safety because the capital is guaranteed by the US government. Couldn't have a better bet, could you? But of course, price will fluctuate depending where you bought it. The next slide is called The Truth About BOJ. BOJ is the Bank of Japan. It's really the Japan's Fed, if you like, for those of you that are more happy with that. It's the Japan Central Bank. And this is the chart of the Japanese yen. This is the futures chart. So it's against the US dollar. And you can see back January 21, Bank of Japan caused a big stir by they've been trying to weaken the yen, and as many countries have been trying to do, weaken their currencies. One of the big themes we talked about 2 weeks ago, and they introduced negative interest rates for the first time. They have a tiered system, but they've started to track down negative interest rates, which was supposed to weaken the yen dramatically, and you can see it did for one day. The market then turned around and said phooey, and the yen has just been getting stronger and stronger since then. So there's another instance of how the market is affected by the Feds, and I want to talk more about that. The more you understand that, the more you'll be able to understand the influence they have on markets. This next chart is what equities think, and this is the point of this is our 6-day chart, which we'll go and look at. Also, all of this we're going to look at in more detail, but you can see that we've had a close below. This is our 2 standard deviations from the mean and this week, I think it was Monday, that last bar, the last bar, you can see on the chart's a partial bar, but the last completed bar closed below 2 standard deviations from the mean. First time it's done that since the crash lows in March 2009, and that means something. And we're going to talk more about that. And here's another chart I want to show you. This is called the Baltic Dry Index. And basically this is an index of the charter rate for cargo ships. If you want to move a big cargo somewhere, if you're in the business of moving dry cargoes, so this is not oil or gases, this is containers and heavy cargo, any sort of cargo, not liquids. This is the rate that you'll be charged. This is the rate the market is quoting. This has been pretty interesting lately because there's been a number of comments about this, with the Baltic Dry Index making its lowest number ever. And this is led to show that there's thousands of ships around the world tied up waiting for a cargo, and it's taken as a proxy for a massive slowdown in global trade. That's not entirely true, or it is true, but that's only part of the picture, and I'm going to show you more of that as well. And of course, the big talking point at the moment is oil, and we're going to look at that in more detail as well. But as you can see with oil, these numbers here are the Daniel Code support levels, and it's right down now to the close to the 2568 line, which is the last level of support within this operating swing, which runs from 2008 back to 1999. And if you have a look at this, we're sort of back to those sorts of levels. You wouldn't know it in this country or in Europe, where petrol prices haven't fallen by anything like what they should in America. Gas is flirting with $1 a gallon, and here we're on the rather silly metric system of litres, and it's today gasoline here in Queensland's $1.28 a litre, which is close enough to $3.40, $3.50 a gallon. So our prices haven't come down that much. Right at the highs, when oil was up at $150, we were paying $1.49, so we've only come off 30 odd cents from there. Whereas the market's down about 80%, down to 1999 levels. That's what happens in socialist countries that tax everything they can get their hands on. Free trials page, folks. Any of you who are interested in finding out about the Daniel Code, I just Jeff Schlink got Schlinky here. Paid $1.29 for gas. Okay. Haven't seen you for a long time, Jeff. Good to have you with us, Mr. Under Par. That's great. Yeah, $1.29 per gallon. Well, we're paying that for a litre. Pretty crazy. Anyway, that's socialism for you. Coming to America if Bernie Sanders gets in. Free trials. Anyone's interested in Daniel Code, please help yourself to a free trial. We don't promote or market what we do. We simply say take a free trial of everything, and if you like it and it suits you, that's fine. What suits some people doesn't suit others, so best arrangement is for you to have a look yourself, and if you just click on the free trial banner at the website, you'll be able to create a username and password. Email that username to Terry at supportofthedanielcode.com. Terry Knight's our webmaster, and he will switch on all of the everything on the Daniel Code for you, and you can see for yourself whether you like it or not. Yes, Mr. Neptune, can we address what happened gold silver day? Sure, we're going to talk about gold at length. Boyd's sitting there urgently waiting for me to get on with it. This is our compliance statement, folks, which I'm obliged to show you, and I'm always glad to show you. There is real risk of loss trading commodities in futures. It can be substantial, and if you don't know how to trade, you haven't learned the Daniel Code way, there's a bigger risk of loss. So If you haven't already learned how to trade the Daniel Code, I suggest you do. Okay, so let's move on. And the first thing I think I've got to do is get back my little cursor here, and we can get rid of him. And now we can start to look at the charts. This is not right. So what we'll do is we'll move it so it is right. And in here, how's this, Frank? This will be better. This is where Frank bought his big lot of gold, and this is early November. Frank was saying this is likely a bottom for Huey, with the possibility of a false break, which is exactly what we got over here on January the 19th. And I wanted to show you a bit more of that detail, and just bear with me while I get there, because I'm actually going to take some entries from Frank's emails to me, and just show them to you. This is quite extraordinary. I mean, you know, we do it all the time, but that's what the Daniel Code does. That's what the Fourth Seal does. But there has been little comment about it. If you want to learn more about this, folks, have a look at the Daniel Code website. You'll see here, I put up this last post from Frank, and there's another one further down on forecasting gold. So if you want to know more about this, please go to www.thedanielcode.com and read that. But I'm going to show you some of this stuff here. And I'm going to start with, let's see. I had something else. Just bear with me for 1 second, folks. I'm sorting through the actual emails from Frank, and I'll get the one I want to show you shortly. Okay, here's certainly one. Bear with me, I'm rapidly opening zip files here. Okay, this is part of a text file that Frank posts every week. He posts this stuff straight into the website, sends me a copy, of course, so I can look at it. And this is from an email dated September the 7th, 9/7, that's September the 7th. I hope I've got that right. I think my Outlook converts it the right way. And way back there, look what he's saying. Major alert, equities are possibly on the verge of something big. And he's starting to say that this is a major alert for you. That was the first one I want to see. There might have been something there on gold as well. I'm not sure, but I know these ones are. Just taking a moment, because these all come in zip files, and they take a moment or two to enter. Here is this is Frank. This is the original of his posting, and this is dated 13th of the 9th. This is in this file. It's dated September the 13th, September the 14th. And look what he's saying. This is the low, folks. This is talking about gold. This is the low, folks. Blah, 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 blah. And he goes on further with that. Gold miners very weak. So-and-so touchdown. Did this last Friday. Came here, came there. Mysterious message tells us it's the low for gold miners. I'm not so sure about gold, but I dare to say it's here. This is the low for Huey. There you are, straight out of the Fourth Seal. If you weren't getting the fourth seal, you've missed out on an incredible opportunity. And let's see the last one I had for you, just to reinforce what's on the website, which I think is pretty self-explanatory. And this one is, here it is. This is the original of the text. Let's see what he said. What was I looking for here? Here's gold. Here we are. Here we are. Odds favour. A turn back should happen very soon now. Any buy signal from here taken with both hands. What is even more interesting, action in the Huey. Gold mine is very weak. We've talked about that. He gives you the technical details, where it was, where it bounced, Daniel code lines. It keeps turning at these Daniel code numbers. And this low last Friday came to 44 cycle low. Both lows, not so sure about gold yet. Dave said here, he says it again, this is the low for the Huey, folks. General picture for gold, nothing much change, positive developments. Wait for the signals, which of course we got. But the point is, Frank has been yodeling about the Huey making its low, and called the low in Huey absolutely perfectly. Right back here, 911 was the low before we had this false breakout here, which was immediately reversed. Okay, so if I've taken that time, please, you can read about it in much more detail on the website. Shouldn't copper be correlated with gold and silver? No, Neptune, they're not. Gold and silver and Huey are very highly correlated. They're so highly correlated that a signal in one can be executed in any other if it is elected. But copper is not so highly correlated that you expect to see a similarity of price direction, if not quantum. Okay, let's move on to our other things. Keep posting any comments, guys. I'll come back and we'll do all those. Here's, let's start. We want to be on our 6 week. Here we are. Let's start with our S&P. We won't dwell on this because you've seen it a lot. Interesting thing is we've got a couple of major swings in here. This is one. There's lots of minor swings, as Matthew was pointing out to me. But this is the dominant minor swing down to here. And the major swing, of course, goes down to here, the March 2009 low. And these Daniel code, these red and black lines you can see on the right, these are the Daniel code retracements. They're not fibs, they're not old highs or lows. They're a mathematical model that we've used here for a very long time. I'm going to talk about negative interest rates, Dick, yes. It's extraordinary. These control all markets in all time frames. And what you're seeing, which, you know, giving you a picture of big angry bear, because technically we've got the second of the bear market signals. You remember the first one was a close on the S&P, which is the broadest measure of US equities that we use. This solid line up, this is the mean or median of the Daniel Code trading channel, which is what these blue lines are. This is a very special way of drawing lines that represent time and price. They're an angle, and an angle combines both time and price. That's where the expression the fourth seal comes from, or the fourth degree if you prefer. The first degree on charts is price. That's this X angle up and down here. This gives you price. The second degree is time. This is the y-axis along the bottom here. This is measuring time. The third degree is volume. We used to use volume a lot. We don't use it anymore because it's now unreliable, given all the dark pools and trading that's batched. We don't get accurate volume anymore in relation to when it actually occurred. So we don't use that anymore. And the fourth degree is an angle, and an angle is a line that combines time and price. and the fourth seal that we use in our forecasting and analysis is a special type of an angle. But we have basically, there are two, I wonder if I can make this a bit clearer for you. There are two swings here. This is the minor swing to here, and the major swing is going to run all the way down to here. Okay, I don't want to cover that up, so I'll just leave that down here. So this is the minor swing, and these inner line of retracements down here, these are the retracements of the minor swing. So far, this market's moved down almost exactly to the first number there, 1885, and that's telling you the market is telling you what it's correcting, and it's telling us that it's correcting the minor swing. And if that's what it's doing now, then its maximum target is likely to be about 1602. 50% is the most common retracement number, and that would be 300 points away from where we are now, which would be enough to give quite a lot of folks a stir up, I suppose. Everyone seems terribly sensitive. I guess if you're long the stock market and you don't know how to trade futures and you don't know about hedging, you would be concerned. But for us, of course, it's just great fun because we can trade both ways, and futures trading pays exactly the same going down as going up. The only difference is once it gets a roll on, it goes down faster than it goes up. And the old saying, markets go up by the stairs and down by the elevator. And we're going to have a look at how this is likely to develop. At the moment, it's only correcting the minor swing. There's nothing to say at the moment. There's no crash cycle on this market. Way back here, 2007, we had a crash cycle right at the high. Those of you who were with us then had a pretty good idea of what was coming. We call this low here in March to the day and the number. But when these corrections start off, they start off as just corrections. And what they are in equities, they're a process of the market losing confidence. And that's why I showed you those two instances earlier of the market ignoring the Fed when it says it was raising interest rates. And in fact, by bonds roaring up, that's telling you that interest rates are still going down. And that's in direct contradiction to what the Fed said it was doing and what it's trying to do. And the reality is markets aren't listening to the Fed at the moment. Then I showed you the chart of the dollar yen and the same thing. Bank of Japan's desperately trying to weaken the yen with negative interest rates. They thought they'd weaken it. Well, it got weaker for one day, and since then, since the 21st of January, it's been pretty much straight up. But how these markets start is they lose confidence. You get this rollover, and it takes time. And then what happens is that punters gravitate more and more to the safety of the stocks that are still doing well, and they hold up as other stocks weaken, and then eventually those favourites start to fail as well. And because they've held up much better, they finish up going down much faster. So at the moment, all we have really is a correction. We technically are in a bear market by Daniel Code definitions, which means the major trend is down. But at the moment, all we're seeing is a correction. And there's nothing to say that we'll see any more than the correction. We could have a long multi-month or even multi-year correction. As this market, needs to stabilize, find some guts. Valuations are very, very crazy, folks. I mean, I know you can find all sorts of analysts that tell you they're okay, but honestly, I mean, you have a look at a company like Twitter. It's a wonderful name, big name. It's been a lot of fun for a whole lot of people. Came out with their results yesterday. And they're just down to $14 odd. They've been, $56, $57 stock, they stopped growing their base. They had, in rough terms, 360 million discrete users, 359.9 of which are complete bloody idiots, in my view. But that's only my view. I don't have Twitter. I don't even know how to use it. It's been a wonderful opportunity for the great unwashed to shout their ignorance at the world, and a whole lot of 350 something million people have loved it. The question is, are there more idiots than that in the world? Well, obviously there are, but they're not finding their way to Twitter, as my children tell me. There are lots of other interesting applications that the young people are into now. I have no idea what those are either, but there's a stock that's off from 53, 55 bucks or something to 14 bucks. And, you know, it's not on profitability. It doesn't make any money anyway. It makes like 700 million for a company of that size and valuation. It's just crazy. So some of these valuations, in fact, pretty well all the valuations are, the polite word is stretched. My word is just plain crazy. And they need to come back a little bit to reality, maybe quite a lot. So we'll watch these numbers here closely, because this chart's going to tell us which one of these sequences it's correcting. At the moment, it's only correcting the minor sequence. There was no crash cycle at the high. There was a 59, but it wasn't on the first hop. It's not the crash cycle. We could just get an extended correction here, or hopefully we might get something a bit more exciting. Let's have a quick look at this on the much longer term chart. This is the 24-day chart. And as you can see, this hasn't quite taken out two standard deviations. This line through the middle, the median or mean of the Daniel Code trading channel. First line below it is one standard deviation from the mean. Next line below it's two standard deviations from the mean. And it looks like the market's likely to close below this very shortly and confirm this on the slowest chart. I just want to show you this timing cycle. This is the 2007 high. And we can run a Daniel Code trading channel up here, and we need to have contact, one more kick will do it, with the first push out, which we do, and one other point, which we do up here. So this is a valid Daniel Code trading channel, and this is what happened in 2007. Now we can change this to make it, instead of one channel, we can make it two channels. And you can see here that from the high, this was the high, we had one. This is a 24-day chart. Each bar is 24 days. This is our longest analysis. Basically, it's a Daniel Code month, if you like. So we had 1, 2, 3, 4, 5, 6, 7 months before we got a close below two standard deviations from the mean. And when that happened, all hell broke loose, as you can see. Another couple of months, and then we had the big waterfall down. Counting from where we had the high here, which we forecast, 1, 2, 3, 4, 5, 6, 7, and we haven't got there yet. It's going to be in month 8 before we get a close below the two standard deviations. So this correction is not as fast as the correction from the 2007 top, and as such, it probably won't be anything like it's serious. But we'll see, and we don't have to know the future. The reality is we can't know the future. Nobody knows the future, only God, and he doesn't tell me and probably doesn't tell you guys either. And people who say otherwise are just being fanciful. But if you watch the charts, if you watch these Daniel Code numbers I showed you on the 6-day chart, you will see how these markets tick off these Daniel Code numbers all the time, and they show you which retracement they're tracking. And the first thing at the moment is correcting the swing from this high down to this low, which is the October 2011 low. As long as it's correcting those retracements, we're going to have a correction, but nothing too dramatic. 1600 maybe. Once it starts ticking off the numbers to the low down here, then look out. That means we're going to have much more fun. Okay, so let's go back now and have a look at oil. Here's our back to our 6-day chart here. Let's have a look what's happening with oil. And here it is. And this sort of nav suite has stopped working. Wow. It's a bit of a worry, this damn technology, isn't it? But don't fret, folks. It should be back soon enough. It'll be opening up momentarily. Yes, Janet, yeah, they're idiots on Twitter. Well, yes, they're idiots everywhere. Mike Olnett, can Daniel code be applied to a lottery game? Yeah, random numbers. Mike, we've actually got a program that we call our random number generator. Here's Trade Navigator coming back now. So much for technology. Shouldn't do that, but it does. Let's go back to our 6-day chart. And this is oil that I was trying to show you. Let's make sure your screens have changed and you're looking at oil. Yes, you are now. And look what's happened with this market. You've got this major retracement. We'll see it more fully on the 24-day chart. This is the retracement from the 2008 high all the way down to 1998. And have a look what this market's done. Okay, it comes off. It rallied back up here. It comes down. It kind of sits on this 78.96 number. Rally up, comes back, sits on this same number again. Keeps working between these numbers. Rally up. Eventually, test the 106.95 from the downside. Down it comes. It runs straight through the 79, runs straight through the 66, and then it catches itself at the 45.90. You may think this looks a bit rough, but remember that these Daniel code target recognition is valid on bar high lows and at the close. So if we change this chart to a close only, you can see that this target recognition up here and twice down here in January 15 and again in March 15, once we switch this chart to a close only chart, that target recognition was very, very precise. So this market is screaming at us, yes, I know what these Daniel code numbers are. Yes, this is the sequence that it's following. So no surprise. Where was it going to go to next? 25.68. The low today was not far away from that, 25.05. And that's why oil is at that price. Once we break this sequence, we're going to have to go to a different sequence on a longer term chart. And we may even have a chance to look at that on the 24-day chart. But I want to run through what we've got here. Let's look next at gold. I've talked about the buy signals in gold. Boyd's very interested in this, as there is clients. Really big time gold buds, my friend Boyd, as is Harold, of course, over there in Reading. So, same thing I told you before. See this market coming down, tracking, it starts to track this Daniel code ratio, and it jumps from one ratio to another. It starts here on the smaller ratio, then it switches to the major ratio here, the 1186, tests it again, goes back up, tests 1380 from the other side, from underneath, breaks through this ratio, breaks through this one, all getting sloppy, and all of a sudden, look, bang, it's down, and it finds this 1.89 times the previous range. That's this big range up here. A, B, C. A to B extended 1.89 Daniel code ratio. David Webb from C, and look what you get, 1047.8, and that was the low in COMEX gold there. Now, where's it rallied to? Well, straight back up to the last Daniel code number. 1269 is the first retracement. That's the 29% retracement of the minor swing. If you see this dotted line, I'll just get out the spotlight again. If you see this dotted line through here, it's telling you these numbers here, these are Daniel code retracements of the swing that runs from this low here to this high here. Boyd, this is the minor swing. Okay, and I saw the chart you sent me with a whole lot of numbers on it. Those are not Daniel code numbers, my friend. The Daniel code numbers are on the members charts, and you'll remember you should be looking at them. But anyway, that's where it's gone. It's gone straight to retrace the first Daniel code retracement of the minor swing. What we'll look for once this starts to continue this momentum, we'll look for it to start hitting retracements off the major swing, which are not on this chart, but that's what it's got to do before it starts to convince us that it's going on to make new highs. And of course, that might be a considerable period of high. But I mean, it's been a stunning rally, and Frank forecast this, put his own money on it, stated it in the fourth seal commentary again and again and again. And for those of you who are not aware of it, let me show you. That's this stuff along here: DAX, S&P, crude oil, natural gas, copper, T-bonds, DX, and gold. Frank does a fourth seal analysis on all of these for us every week, and you can subscribe to whichever ones you want to, and this is the sort of thing you get. Here is gold, and we get a number of charts of different time frames: 24, 12, 6, and sometimes Huey. This bottom one here is Huey. Frank, it might be a good idea, mate, while you're here, that we start just putting a label on these charts, because I know they're different time frames, but it might be good to just put a label on so that people know easily what they are. Here's Huey, and look, this is the 24-day chart, I think, and you can see how this is where Frank called the low, said there might be a false break. There was, perfect, right at the Daniel code black line, 101.67, absolutely fantastic stuff. And then you'll see when you read this that he's also melded some of the stuff we've learned from analysing the 067 charts, which is quite a new trick in itself. Right, don't go away, you guys who are asking questions. I'm coming to all of you. Augustus, how can you master the Daniel code? You can have a free trial of the website to see what it's all about, mate. Or better still, you can come to Los Angeles at the end of May, spend 3.5 days with me, and I'll teach you all about the Daniel code, including forecasting, time, and price, just the way I taught Frank de Beer, who's now our star analyst here on the fourth seal. Okay, so that's where it is, folks. Those are all the markets that we do the fourth seal forecasting on: DAX, S&P, crude oil, natural gas, copper, T-bonds, US dollar index, and gold. If you have an interest in those markets, you should be subscribed to the appropriate fourth seal, because not only do they tell you the time and price at which turns will take place with high probability, but they give you a unique view of trend that's not apparent in any other way. In other words, you're not just waiting for the turns. You can identify from the fourth seal what is the trend in a way that no one else sees. And it's quite extraordinary what happens if you bias your trends, your trade slightly in the direction of the trend. It is really quite extraordinary. Okay, let's move on. We've got hundreds of things to talk about today, and as usual, not a lot of time. This is that was gold. You've seen what it's doing. We want to start looking for it breaking through here. Specifically, Boyd, we need to see it starting to track the retracement from this low to this high. Okay, we need to see it retracing the major Daniel code retracements. That'll be the sign that it could break out to new highs, which I know is what all you gold bugs are hoping for fervently. Okay, let's see, move on. What else I had to show you today? I want to talk to you about DX 057. We spent a lot of time last week talking about currencies and how the only thing holding most of the world together was the US market and the US dollar index. You've seen this chart before. I've shown it to you. We've discussed it a number of times. We had, this is a retracement of the major swing. It's retraced 59.3%. That's where this 100.830 line is. And we had a Daniel code fourth seal line right at that point, which is how we forecast that as an important high. And since I saw you 2 weeks ago and we talked about this, this market has sold off quite a lot. Not noticeably in the scheme of things. You can see from way back here, really, February last year, the government's been happy to have this running between 93 and 100, and it's still trading within that range. But, you know, not every country can devalue its currency at the same time, and that's precisely what every country is trying to do now. And China, a lot of talk about, you know, China's going to have a really big devaluation and that's going to be a shock. I can't comment on that because I've been saying for as long as any of you can remember that the data we get out of China is fake. It's not transparent. It doesn't mean anything to me because I think they just think of a number and print it. But there is no doubt that there has been massive overcapacity in the banking sector, particularly the government sector, and trying to kickstart an urban economy. It's extraordinary. There must be some massive bad debts in there, and they're going to need to devalue at some time to have any hope of dealing with that. But, you know, this has happened to all developing countries, and eventually they all find a way to do it. So there's no need to worry about it all too much. Let's go to the 24-day chart. I showed you, amongst other things, the Baltic Dry Index, and I said, you know, this has been hit a lot in columns and people commenting on the Baltic Dry Index as, you know, cheaper to rent a ship than buy a Ferrari, rent a Ferrari. Let's just have a look at that. Absolutely a recent phenomenon. And I always say that we don't spend long enough looking at long-term charts. Here is a long-term chart. This is the Baltic Dry Index, going back to, it's a bit twitchy, isn't it? Doesn't seem to like this very much. We'll see if we can do that. This is the Baltic Dry Index going back to 2004. And you can see here was the peak of it back in 2008. And it's been in steady decline, pretty much continuous decline, from 2008 to 2016. So, yes, it had its lowest level ever. Yes, this indicates that there's massive overcapacity in the shipping industry, and the ships that don't have work, the higher rates for them on a bareboat basis are very, very cheap. But this is not actually a new phenomenon. The fact that it's making new lows is new, but essentially it's been making new lows ever since those highs in 2008. And this is a function of overcapacity. It's what's affecting oil, it's what's affecting mining, it's what's affecting iron ore, it's affecting all these sort of extractive industries. You've had massive amounts of relatively cheap money. You've obviously had very, very lax lending standards. If it was a good story, they've lent it, and the bigger the customer, the better, I guess. And they've built massive overcapacity. The reason oil is so cheap is the world is awash with oil. You might remember it wasn't so many years ago we were getting hit with, oh, it's peak oil. It's peak oil. Oil's going to run out. There's no more oil. You know, that was a bit like the Y2K scam. Some people had a lot of benefit out of it, but it was just rubbish. And this is rubbish. The reason prices of all these commodities are collapsing is that we have got massive overcapacity. And a lot of that overcapacity is predicated on China. The big miners, industry, anyone involved with that story has overestimated the growth of China, and they've taken the growth they saw supposedly at 7 or 8% in GDP terms and said, we'll extrapolate this forever. China will go on growing at this rate forever. And all of a sudden, they're learning that nothing is forever, particularly that sort of growth. Whole iron ore mines, billions and billions of dollars, been predicated on one client, China. Same with coal, and now with oil. The American storage Cushing, where the vast underground caves are filled with oil. It's for the first time ever. It's almost full. It's going to overflow in a few weeks. They're going to stop taking oil. There is just so much oil around, and that's why the price is so depressed. And that capacity has been built for many years, since the war pretty well. The OPEC countries have in some way controlled the supplies of oil. They have their regular meetings. They set what their quotas are. They usually individually go out and break it and cheat a little bit. But in general terms, they've controlled the supply of oil to keep the price up. And then what's happened is America's perfected this art of fracking, extracting oil from shale rocks by fracking. And you've had this huge new supply come online, and that's created a whole new source of oil on the market. And oversupply is what's led to this fall in price. The OPEC countries want to keep their clients, so they're not going to cut down their pumping. They'll just take cheaper oil and hope they can put the fracking mob out of business. The fracking mob have got to keep pumping. They've done it, a lot of it's on development finance. They've got bills to pay and interest to pay and banks to worry about. They've got to keep pumping as well. So it's a vicious cycle. It will be broken, and my guess is fairly soon. I think that probably once there's enough pain being inflicted on the banks, there will be a realization that this is good for only one lot of people. That's us, the customers, and we never figure in the scheme of things. That's very important. So once the banks start getting hurt, you can expect to see some change of behavior in the mining industry. I want to show you that chart because it looked really impressive when you look at the last few weeks, but when you take a step back, take a longer view, it ain't so, as we say. Aussie US I wanted to touch on to make the point that on the 24, here we are. I want to make this point of, first of all, correcting the minor swing. Here's the minor swing to here, major swings all the way back down to here in 2001. We were talking about how markets will correct, first of all, the minor swing, then the major swing. This is the minor swing here, just so you can see it. And the major swing is all the way back to here. Okay, so these sequences, these numbers down the side, relate to various swings. There's, in fact, 3 swings on this chart. Let's show you the third one. Is actually in here, which is the penultimate swing. And now you see those. I'll take them off. There's enough on here. And if we expand this chart a bit, you can see that what this market has done is it's tracked down these numbers. Here's the break from the high. Here's the all-time high, 108 Aussie against the US. Absolutely ridiculous. But was done for a purpose. Australia was buying massive amounts of mining equipment and other sorts of equipment, largely from the US, and the Reserve Bank of Australia pumped up interest rates to keep the Aussie dollar strong, to help the major corporations who are really the government's clients. But then watch what happens here. We move on here, and this market comes down. It sits right on this 95.73 number, which is the intermediate swing. I showed you the 3 swings. Then it goes down, bounces off a minor swing, goes all the way down, does a key reversal bar off a minor swing. It's telling you it's correcting the minor swing. Here it flirts with the major swing but doesn't revert. Here it goes right through the minor swing. Okay, no surprise then. It's been following the minor swing all the way through this package here. It skips through this one, skips through the next one, and stops essentially at this, or didn't quite get there. 67.79 is where I said would be its first important target, and it pulled up a bit shy of that, 68.27, which told you there was going to be a bit of a rally. But this, if you get these Daniel Code retracement channels correctly, it will tell you which swing it is correcting, and that's important knowledge because it tells you what the likely probability of the depth of the correction is going to be. And if you're interested in that sort of stuff, I will teach you the 4th and 5th seal forecasting, and you can forecast this stuff yourself. But there's a good example of what we've been seeing there. The last market I wanted to show you today, folks, we do have a few more Australian clients than I realized, and this is here, this little fella here. The code, Daniel Code, the Trade Navigator code is AP. This is the Australian Share Price Index. It's now called, they used to be called the SPY. It's now called the SPY 200. It's an S&P or SPX sponsored index. And it's the largest 200 companies on the Australian Stock Exchange. Here were the crazy years in here. 2007 hit a high of 6,900. Here's the March 2009 crash in sympathy with the US market. this is what it's been doing ever since, going sideways now. Don't be confused. This market is very, very different to the US market because this is a market where paying dividends is a premium. In America, stocks don't really pay dividends at all, or if they do, they pay out a very small percentage. It's all reinvested in the company. It's all about capital gain. In Australia, it's all about dividends, and that's because we have a taxation regime where tax is paid by the company. The shareholder gets a benefit. He's not entirely double taxed on it. So dividend is very, very important. So these companies are paying out, are paying out massive amounts of money as dividends all the time. And in fact, they've gone so far to attract, they're trying to sell themselves, get more people to buy their shares. The biggies, the four banks, the four Australian banks, the four pillars, Peter Costello called them, are the most profitable banks in the world, and that's because they don't have any real competition. The government does not allow them to merge and will not allow a takeover. So American banks trying to compete in Australia are doing it with two arms and one leg tied behind their back. There is no real competition. The four major banks are an oligopoly, which means they are a monopoly of four, a small group of monopolists, which is why they are the most profitable in the world. So there's those four. Then there's the big miners, the most notable of which BHP and Rio Tinto. And they've all pretty well said the same thing. They've said, we'll commit ourselves to progressive dividends. That is, we will never reduce our dividends. Our dividends will go up every year. And those six companies, the four big banks, ANZ, Westpac, NAB, and Commonwealth, and the two big miners, believe it or not, they account for something approaching 78% of the Australian share market. And everyone's in them. Well, the superannuants, they're all in it. I had a great story to tell you. I'm going to run out of time. I was telling Matt yesterday about, some of you have heard part of it, about I went down to do my tax returns with my accountants in March last year, and they were all so heavily invested in the stock market. And I said, are you getting any advice? And these are smart guys, accountants, chartered accountants. No, you don't need advice. Do it all yourself now. I said, you got your positions hedged? No, don't need hedging for the dividends. They'll never stop paying dividends. Well, guess what? They've all said, including Rio today, that we're not going to be able to keep up this policy. That was our policy. We did announce it, but hey, shucks, things have changed. We're going to change our minds. There's no progressive dividend. In fact, BHP is on a downgrade from Moody's. Well, one of the things they've said is you can't pay these sort of dividends out. You need to retain some cash flow and pay off some of these litigated problems that are building up on you. So this is a market that I think you should be really concerned about. The Australian scene, I should do an Australian webinar so I don't bore the pants off all you people who are not Australians, but there are tremendous problems here, and the banking system here is actually very vulnerable. It appears to be invincible. It's not. There are a lot of companies here that are going to be badly affected. I think we can see some real drama in this index as well. So it's still strong. It's holding up there. It's only just dropped below the one standard deviation of the Daniel Code trading channel. It could bounce back and recover that. It's only correcting the minor swing, as you can see, 46.54. That's 59% of the minor swing, which is just down to here, this low here. So it's still strong in technical terms, but this is one I particularly like to short because they're just so complete and utter denial in Australia of any problems. We're obsessed with things like becoming a republic. We're obsessed with things like gay marriage. We're obsessed with every bit of nonsense and flippantry and unimportant thing you can possibly think of. Twitter, Facebook, everything that's irrelevant and unimportant is front page news all the time. And that's the mentality of this country. And I think a whole lot of people in the stock market aren't much more serious than that. I think they can get a good whacking. And when they do, we'll be there to short it. We've had a couple of nice shorts already. So there you are, folks. That was the main thing. Let me look. We have some really quite quite a lot of questions today, and I want to get to them. Always love to have your questions. Let's see what's happening here. Jeffrey Shrink, hey, there's a Shrinky, there's a voice from the past. Under par, nice to have you with us, mate. Neptune, what happened to gold, silver futures today? The massive spike in price. Well, it's hitting the stops is what's happening. Let's go and get you a daily chart and bunch this in. And what happens, Neptune, that all of these points here are major points to have stop losses. There's one. Don't worry about the numbers. I'm just trying to show you the levels. These will be major points for stop losses, and that's where all the stop losses are buried. And when it hits a big stop loss point like that, it takes off because it's getting fueled by the stop losses. If you short this market, your stop loss is a buy. And in here today, this is today's bar here, Thursdays, it's hit 2 points that were major stop losses, hundreds and hundreds, maybe thousands of stop losses there, and they're all buy orders. They're people who are short and their stop loss is a buy order. So that becomes fuel for this market on its run up. And it's really cleaned all those guys out who are wrong. That's what happens there. We can talk about why shouldn't be copper. Copper's not highly correlated with the gold or silver, Neptune. Negative interest rates, Mr. Deck. Well, it's a joke, isn't it? You know, you're starting to see articles by economists saying, oh, well, there's a lot more scope for negative interest. They can go to minus 4.28. I saw one today. Well, if a central bank goes to minus 4.28, it implies that retail mortgage rates are minus 1.28 or thereabouts. Banks usually have a 2.5% to 3% spread. The day that someone starts paying me interest to live in my house is going to be a really bad day, because that means the house is worth nothing. No one wants it. They want to pay you to stay there. They don't want to buy it. So that's just not going to happen. But that's the stupidity of it. Look, it's an arcane concept. You and I are never going to see negative interest rates. It's a game that the banks are playing with their clients, who are the commercial banks, and it's really a pretty silly thing. It's not real world anyway. Now, would it be valid to execute a signal that is posted for Aussie US in New Zealand USD and vice versa? No, they're not so highly correlated, mate. I've noticed these two trend to move. So they do move similarly. And same Aussie JPY, New Zealand JPY, no. They don't have that degree of correlation. The markets that are highly correlated enough that you can take a signal from one and trade it in the others are the 4 US equities. Dow, S&P, Russell, and NASDAQ, they're all highly correlated. In the precious metals, gold and silver are highly correlated. Those groups of market are so highly correlated that a signal in one can be executed in any other if the trade is elected. In other words, if you have a signal in silver, you can trade gold in the same direction, work out where the right entry is. So they're the ones that are correlated. The others are not highly correlated enough to do that. Long-term charts. Yeah, Matt Corbett, thank you. Don't forget, John, your long-term chart of January 2015 called oil down to $26. So we've been telling you about this oil collapse for quite a long time. We'll see the screen a lot. You are a great man doing a good job. Oh, this is good. You're a great man doing good. Thank you very much. This is Augustus. Thank you. How can I master Daniel code? Get a free trial to the website, Augustus. Learn a bit about it there, and come along to Los Angeles. I think it's 24 to 27 May. I'll just have a look at February. Not that far away, is it, folks? You better make your bookings. It's 24 to 27 May. 24th is the Tuesday. We have a cocktail party, which is really a pretty casual meet and greet in the evening. Say hello to each other. Then teaching on the Wednesday, Thursday, and half day Friday. I take you all out for a group dinner, usually on the Wednesday or Thursday night. We have drinks and small eats and what have you after each teaching session. Spend the whole time together, talk about trading and anything else that interests you. That's how you immerse yourself in the Daniel Code. Deepak, I've been promising you long-term trend charts. I just haven't got around to it, mate. I'm sorry, I've been very busy. When am I coming to LA? 24 to 27 May, Janet. I shall be there. If gold is bottoming big time, does that mean Aussie is bottoming big time? Thanks. No, Ludwig, it doesn't. Gold is driven by completely different metrics. Aussie is more tied to the iron ore price than anything else. Australia is a big gold producer, but it's not important in the term of the national accounts. Daniel, I don't get it. You have minor swing lines and major swing lines. All those lines have a lot of price points. Yes, they do, mate. You just got to take them one at a time. If you look at the members charts, you'll see I just put a few on. It can get very confusing, quite right. Jeff Schlink, my old friend, was at a tutorial. He's posted here, remember when you told me to sell gold? Been watching intently ever since. Well, I'll tell you what he's talking about. Here it is. Let's find gold. Here it is. And here was the high, Schlinky, which was September 2011. And you were at a tutorial in, not sure where was it, mate. I know it might have been in LA, was it? And you were at a tutorial, and we had a TO3 sell signal. We had a 4 seal line. We forecast that to the top, and you said to me, is that a high? Is that the high? And I think I said it probably is for quite a few years anyway. Shrinky sold a good lot of his gold then and made a whole lot of money, as you can imagine. It was a whole lot better to be selling a lot of your gold around 1900 than it was selling it around 1100. Anyway, good to have you with us here, Jeffrey. Great golfer, under par, great golfing guy. Interest rates there. Yeah, quick look at silver. Won't have time, Boyd. I'm sorry I spent so much time on other things. Here's Chip Stevenson, was a good mate of mine now. He was at the LA tutorial, still in the fray late again. So it's that and the other. Below zero. Nice wind chill the next few days. I think he's up in Port. Not sure. You're up in the northwest there somewhere, aren't you, Chip? Yeah. Yeah, we've got a recording, mate. You can watch the replay of this. You haven't missed anything. Sav, tell Neptune, copper is an industrial metal, not a precious metal. Yes, quite right, mate. Random number generator. Okay, I sure can. That's why it's not correlated quite right. Do I have other trainings after the tutorial, Daniel? Not until December, mate. We only do 2 tutorials a year. It was in Taupo, Schlinky's telling me. It was in Tanka. Frank and I discussed it. There must have been December 2011 if Frank was there, yeah. Yeah, tomorrow night, God, 18 degrees. 18 degrees Fahrenheit. Whoa. Thanks. That's Tom. Tom, he has to go. Go away, mate. You're right. Schlinky, that was Taupo. Good stuff. If Frank was there, terrific. No, Daniel, we do 2 tutorials a year. We do one in LA in May, and the other one, if we do a second one at all, is in December in New Zealand, either Taupo or Waiheke Island. Sometimes we don't do them at all, but the one in May is scheduled, so get yourself along there if you'd like to. I can leave you with a quick run of the random number generator if you like. Let's see what we can come up with here. This is a strategy that will actually show you how to trade this is a continuous contract, the 067, and we're going to run this for 6 months, otherwise it will take forever. And you can run it for as long as you like, whenever you like. Dan, is there other advanced training past the initial tutorial? Yes, mate, you can do more tutorials, or you can have private sessions with me. You can be as good as you want to be. As good as you want to be. Okay, RB3, this is gasoline, folks, and this is a not so random number generator. For those of you who trade futures, this is a futures contract with a margin of about $6,000 or so. This is for 6 months. This is June to December 2015. And you can see that it's far too long, this is going on. I'll just check the margin for you briefly while you watch this thing do its thing. It might look like it's not changing. It is. It's testing 2,040 variables in this market, and it's got some codes in it that tell us which is the best way to handle your trades and what is the possible profitability of trading this market. And you can see the number at the top already is 25-odd thousand. And that's what it's possible to get from trading gasoline if you know the Daniel Code way. Let me have a look what that margin is. Here we are. Folks, this is going to be the end of the webinar. I'm sorry to have kept you so long. I'm just waiting to find the margin for gasoline so that you can express this in terms of, here it is. The margin is 4,800, and 4,800, you can see that for the 6 months there was a possible earn of 27,000 or beyond. These are all the combinations that you can use, and you can even sort it by win percent, net profit, anything you like. So raise your sights. You can make a fortune trading futures if you know how. All right, folks, I have to end this webinar. I'm sorry to have kept you so long, and I do thank you for sticking with us. This is nearly finished at any rate, so it shows you what the possibilities are when trading some of these better futures contracts. Why are they better? Well, it's because the ratio of the tick value to the margin is superior, because it's a contract that's not traded by the great unwashed very much. Okay, thanks for having us with you today, guys, and I'll see you all in a fortnight. If there's anything in particular you'd like me to cover, please shoot me an email, and I can prepare the appropriate charts to talk to you. And for now, I will say goodbye.